New information was just leaked about the next potential increase to the Fed rate. What was leaked and how does it affect the housing market? Let's get to the bottom line. Morning. Lots of new information to go over when it comes to the housing market, as well as data on the next potential increase in the Fed rate. But first, let's take a look at where mortgage interest rates are. So on average, we've seen rates move higher from 5.8% to 5.94%. That puts us up roughly 3% year over year. When it comes to application volume, we've seen volume decline by 0.7% week over week. That puts us down 23% year over year. So seeing continued trends in both of these numbers, and we'll want to keep an eye on these numbers going forward on a weekly basis to see how things play out. When we look at the Fed and what changes we might see, we have important information that was leaked from a reporter with the New York Post, Nick Timiraos. He was talking about the next Fed meeting, which is going to be on September 21st, and Nick wrote that the Fed is expected to increase rates by 75 basis points. This would bring the Fed rate to between 3% and 3.25%. And the next meeting after that is November 2nd, where we could potentially see a Fed rate approach 4%. So the financial markets are starting to react to this new information. It's from a fairly reliable source, and that reaction is going to cause an increase in rates in the short term. Looking ahead at where rates may go, we want to keep a close eye on inflation. So Jake, what information do you have at this point when it comes to inflation?
Yeah, thanks, Kyle. Well, when it comes to inflation, it's important to keep an eye on the underlying factors that drive the rate of inflation. One primary factor that drives that is the level of demand. And we've seen some news out of China that could lessen the demand side, at least in the short term. The southwestern city of Chengdu announced a lockdown of its 21 million residents. They are required to stay home, with households allowed to send only one person per day to shop for necessities. This is the largest Chinese city to be locked down since Shanghai, and it comes in addition to other major cities, including Shenzhen, that have stepped up COVID restrictions as recent as this week. Now, these lockdowns can reduce oil demand and consumption, which can cause the rate of inflation to move lower. Now, one other component is goods and commodities, which account for about 40% of the CPI inflation index. Now, these saw major declines from their peaks, and a few examples of that would be lumber, which is down 66%. We've got wheat, which is down 44%, and then copper down 30%. With declines in many commodities from their peak, along with higher inflation comparisons from the last year, as well as the Fed rate hike starting to take hold, we could see the picture of inflation starting to improve as recent as Q4. Now, we're going to get the next CPI print in about a week, and we'll be sure to get that data and report it back to you here on The Bottom Line.
Yeah, thanks, Jake. That's definitely important information to keep an eye on, and certainly the CPI print that we'll see for next week that's going to reflect inflation is going to have a big impact, so we'll want to keep a close eye on that. We look at mortgage interest rates, and it's no surprise that they've been a driving factor in changes to the housing market thus far in 2022. So our opinion is that having an awareness of the expected changes to the mortgage rates and the reason for those changes is going to provide a significant advantage to real estate professionals. We want to keep you informed on what's going on and why some of these changes are occurring. Now, rates move in cyclical patterns, so that even though we're seeing increases right now in the short term, we definitely could see improvement in interest rates in the near future. We want to keep an eye out for the time period in which that's going to occur. So it's possible we could see rates improve towards the end of this year or beginning of 2023. It's part of what we'll keep an eye on and keep you up to date on, along with any other significant changes and news when it comes to the housing market. So certainly stay tuned for next week's episode of The Bottom Line.